Get unlimited access to all of our CPE courses at www.teachucomp.com/unlimited CPE.
In this lesson, we will examine exclusions to the general rule about canceled debts being taxable income. In addition to this rule having exceptions, exclusions also apply to the rule. The IRS has defined several situations under which a taxpayer might take an exclusion to the rule. However, if an individual uses an exclusion, they also have to reduce certain tax attributes. Circumstances under which a taxpayer might take an exclusion include: the taxpayer is declaring Title 11 bankruptcy, the taxpayer is insolvent, the taxpayer has qualified farm indebtedness, the taxpayer has qualified real property business indebtedness, or the taxpayer has qualified principal residence indebtedness.
Like what you see? Get unlimited access to all of our CPE courses at www.teachucomp.com/unlimited CPE.